training. If you've just joined us, go ahead and drop your affirmations in the chat. We're excited to have you with us this evening. Drop your affirmations in the chat. Let us know where you're calling in from. I am a BYOB master trader. All my trades end in profit. I am the signal. I am the signal. Don't be shy. Don't be shy. Go ahead and drop your affirmations in this evening. We're absolutely excited to have you with us. I am the signal. I'm a BYOB master trader. I'm an average breaker. All my trades end in profit. So go ahead, drop it in the chat. Let us know where you're calling in from. I want to properly greet you. Is my microphone working? Because nobody's dropping anything in the chat this evening. Can y'all hear me? If you can hear me, say something to me. Don't leave me out here by myself. This is the largest economic empowerment. Well, if you can hear me, then follow instructions. Put your affirmations in the chat tonight. We're here to have some fun and we're here to make some money. You did. Do it again. Do it again. Do it again. I just got on, so I apologize. So I'm just having fun this evening. So, ladies and gentlemen, we're going to go ahead and dive in tonight. I get an opportunity and a privilege to introduce to you an individual that I have a tremendous amount of respect for. I mean, this individual is 100% documented, has all the information on what it takes to be successful, knows how to have a lot of fun, is helping people around the world. She's a retired major for the United States Army, MBA recipient, licensed financial advisor, and we affectionately refer to her as the trade whisperer, the creator of the BYOB cash out strategy. So without any further ado, I get the honor and privilege to turn this call over to the one and only Tasha M. Dyer, the trade whisperer hailing from Jacksonville, Florida. Ms. Dyer, are you on the line?
Yes, I am. Yes, I am. Yes, I am. And ladies and gentlemen, just so you understand who you just had the opportunity to hear from, I'm excited to be here with you all this evening, but to have the opportunity to hear from the visionary, to have the opportunity, right? We're all here because he had a vision. We're all here because it was on his heart and his mind. We're all here because he is the one that saw it. He saw 2 million families. He saw 2 million families being financially educated and impacted. He saw it. And because he saw it, that is why we are here. Now understand, I want you to understand just how important the education is. Because you see his background is in investment banking, right? His background is in investment banking, which ultimately is why the tools that we utilize is ultimately why the premier tool that we're going to be working on this evening, which is why he is actually the spokesperson. So you have had an opportunity to connect with a gentleman that has your heartbeat in mind. So welcome, welcome, welcome. Now today is Trust Your Trade Thursday, right? Trust your trade. Do we trust our trades? And I want to talk about, we're going to dive in here, but I want to talk to you about, tonight we're going to focus on being in charge of your trades, being in charge of your mindset, being in charge of the outcome, right? That's where we're going to hang out. Okay, that's where we're gonna live. And because we're gonna live there, what I want to do is, once again, for those of you who are joining us, right? Some of you all joined us since this call got started. And so since Mr. Rogers, our visionary, asked for our affirmations, right? Since that call got started, some of you all have logged in, but more of you all are logging in. And I need you to drop it in the chat and let us know where you're calling in from. This is how we close out the week. And we're going to close out the week strong. Now, see, tonight we're focused on your education. Tonight we're focused on your empowerment. Tonight we're focused on you. And that's what we do. We educate and we implement. All right. We educate and we implement. So let me see. I see Trinidad and Tobago. Good evening. Good evening, Jacksonville, Minnesota. Good evening, Essex, UK, Milwaukee, Vegas, Jacksonville, Manchester, UK. Okay, United Kingdom, getting up in the middle of the night. I salute you. No excuses. Let's eliminate them all. right? That's a whole nother level of commitment. Because some of you all are like, ooh, 5 o'clock in the morning, set the alarm and get up. Imagine going to bed and having to break your sleep, but that is dedication. Let me tell you, that is dedication. That is commitment to success. No excuses. You just get it done, right? I love it. So, all right, Cleveland, good evening. Good evening. I see Columbia, South Carolina. Good evening, Merrimer, Cleveland, Milwaukee, Cleveland. Howell, Michigan. Good evening, Orlando. Good evening, Cleveland. There you guys go. Jacksonville. Yes, I'm learning. Now change that affirmation to I am a BYOB master trader. But welcome, welcome, welcome. Charlotte, North Carolina. Warner Robins, Georgia. Come on, travel trader. You're a travel trader, right? Pips and trips. That was travel trading. All right, Milwaukee, Philadelphia, Chattanooga, Columbus, right? New Jersey territory. Okay, Milwaukee, Atlanta. See, there y'all. Now y'all listening. There we go. I'm a BYOB master trader. They're like, I'm gonna fix it right now, not next time. Atlanta. Good evening. Good evening. Good evening. All right, guys. So let's get our minds right. Right. Let's get our minds right. I am an educated BYOB master trader anointed for wealth. I see you, Jacksonville. I am an educated BYOB master trader anointed for wealth. I am the signal. All my trades in and profit. I am 777. That's Maple Shade, New Jersey. Good evening. All right. I am 777. 777 means that you have turned the financial market into your personal ATM. So welcome, welcome, welcome. So now this is what we're going to do. Good evening, New Jersey. And now this is what we're going to do. I'm going to go ahead and get my screen shared together. And as I do that, right? Okay, Maryland, DC, all this area, all right, Jersey. Good evening, Baltimore. So, hey, Largo, y'all like, do not leave me out. How you doing, Largo? So if this is your first time online, your first time on here with us this evening, let me get a 111 in the chat. If you're still learning how to cash out, let me get a 222. And if you have cashed out, let me get a 777. I like how you say, I'm learning, but I'm cashing out. I'm still learning, but I'm cashing out. Now, look, we're going to make sure that this is spread around the world. 2 million families financially educated and impacted. So what I need as we get started this evening, what I need all of you all to do is go share this on your social media. So if you're following our Facebook page, right? Are you following our Facebook page? Be Your Own Bank Movement. If you're following our Facebook page, what you want to do is go share it from there. If you're connected with me personally or following my Facebook page, go share it from there. We want everybody to know that they can, hot mic, let's mute you up. So we want to know everybody to know that they can be empowered. We want everybody to know that they can accept the challenge. We want everybody to know that they can be their own bank, right? That is ultimately what we want to do. So go share, 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 right? Let's flood social media with BYOB. Let's flood it. We are BYOB, educated traders anointed for wealth. The education is so important. All right, guys. All right. So, Mr. Rogers, before we get started.
Yeah, I just want to, ladies and gentlemen, it is very important for you to understand the culture of success that, we've wanted to make sure that we avail to each and every one of you for your families. And it's very important, as Ms. Dyer just alluded, that an educated trader is a profitable trader. Because obviously, for those of you who understand this information, yesterday was a very, very significant day for those of you who are taking advantage of the cryptocurrency market. And obviously, there was a lot of fundamentals that transpired when everyone was excited about, the Bitcoin. It had a nice little bullish rally, and it got as high as 66, 67. But then because of lack of information, lack of understanding, so those people, and I saw multiple times on social media yesterday that everyone was excited about getting in Bitcoin, but then obviously today there was a tremendous pullback. And this is why you have to stay committed to this process. You have to understand the movement of the market and understand that your responsibility for the people that that is connected to you, you want to invite them into this environment, because a lot of times we get information, we get excited, and many of us find ourselves getting all of our information with social media and do not understand the market. So you are doing your friend, neighbor, and relative a tremendous disservice if you're not inviting them into this environment so they can be solid, they can be whole, but most importantly, they can remain profitable and not be emotionally entangled with their lack of understanding. So I just want to admonish you tonight and really understand that this is the largest economic empowerment movement in the history of mankind. And your voice is equally important and equally valued. But in order for us to get to those 2 million families, you have to not only take advantage of this information, but you have to be free and benevolent to make sure that you share this information emphatically. This is good news. This is great news. And we're completely trusting you to make sure that we get into the ears and the hearts and the minds that you're connected to. So I want to just share that with the group, Ms. Diane. Back to you.
Oh no, you right on point, right on target. And I mean, I say it all the time, and I'm gonna echo it right after you as you made that point. Facebook is not your financial advisor. So taking advantage of trading, investing, and no matter what you're doing, this skill set is so very important. It is so very important. And so definitely want to, I mean, it's just something that we need to do. And so, ladies and gentlemen, what I'm gonna do tonight is I'm gonna make a shift. And I'm gonna do that, and we'll go back next week, but I think that this order is going to be better. So what we do know about our call schedule is Monday through Thursday at 5 a.m. and 9 a.m. Eastern Standard Time, that we are implementing what we're being educated upon. So in the mornings, right, we're up in the markets and we're analyzing. And then, of course, on Tuesday nights, you're on the line with Miss Anderson. And what she does is lay a foundation, right? She lays down the foundation of understanding the BYOB strategy, right? Understanding the basics of it, because that is how we build the house, right? We build a house on a solid foundation. And then what I come in and do on Thursday nights is walk you through understanding. I come through and I walk you through the tools analysis. I walk you through everything that you have access to. And so as we kind of dive in real quick, just want to show you, when you log into im.center, okay, which is where our education begins, right? You come in here and you're going to have access. And this is what I mean by the tools. So you have the foreign exchange, right? This is the FX Academy, right? And then of course we have the high frequency Forex and our digital currencies, okay? And so with each one of these, there are tools housed on the inside, okay? So we have tools, right? We have our digital currencies, and you're welcome for this. So, we have our digital currency. So each one of these. So we've been training on these things, right? And so we always the market kind of guides our training, right? The market and what's going on. And so just like I said, I wanted to talk to you guys about something. However, I'm gonna make a shift because the market conditions, different things, is going to guide our training. And so that is why I want to kind of revisit this. And so where I am right now, okay, so yes, can I get the vibrato in here? That's not the one that I'm using. So what you'll see is you'll see me come to imlwebanalyzer.com, okay? This is where I come, imlwebanalyzer.com. Now, when I said he's the visionary of background in investment banking, when you log on, he's heard in over 120 countries. So no, you might want to check your mic. I don't know, but I know you guys can hear me. I'm not playing this though. So, but right here, imlwebanalyzer.com is where I come, okay? imlwebanalyzer.com. And so this video is Mr. Rogers speaking to worldwide, right? I mean, in over 120 countries. And so his background, so this tool is vetted. Why wouldn't we use a tool that's very comparable to what the big banks of the world utilize, right? We want to use a tool that's very comparable to what's able to be utilized. So why not make this easy on yourself? Okay, let's not try to reinvent the wheel. So this is very important. And so as we come in here, right, because we get enrolled with the elite package, and because we know that if we don't, we selling ourselves short. right? And you don't allow anybody else to get set up, right? We don't want to set somebody up for failure. And if you're not enrolling with the elite package, then that's exactly what you're doing, right? Because they don't know what they don't know. And so when they know, then you don't want that person upset with you because you set them up for the okie doke, right? So now when we get enrolled, like I said, you have access to all of this. Now, in combination with the vibrata, that's why when you're on our YouTube page, you see quite a bit of training that references the vibrata and the harmonics, okay? Now, because your learning process is a skill set, right? You have to commit to learning. And as you commit to learning, there's going to be some advancement, there's going to be growth, there's going to be elevation, right? But what I personally believe, since I've been training, coaching, teaching, mentoring, the harmonics and the vibrata is a great place to start. It's a great place to revisit. It's a great place to, to kind of help set you up. And what we saw this week is that the market was kind of slow. Now it was kind of slow because we didn't have those economic drivers that we were looking for. And so I just believe that the combination of these two tools really kind of set you up. And we saw quite a bit of setups. Now my setups are actually on a different browser, right? My setups are on a different browser. So what you're seeing from my setups, like I said, they're on a different browser. We can go there if we have time tonight, but I do want to take my time and walk you through here. I'm going to walk you through the BYOB cash out strategy, right? I'm going to do that. But what we were able to see, and I'm going to close this and reopen it, what you're going to be able to see is the reality that what we saw was quite a bit of setups, okay? We saw quite a bit of setups, where we were on that 4-hour time frame. We were able to see quite a bit of setups that we were waiting on. Now, once again, the market was slow. And the market was slow, and that's why I have up the news. Because what we do is we always check our current conditions. Now, I'm gonna let you guys know, as we go through this tonight, you guys know I'll do a part 2, 3, and 4 if we have to, because I want to make sure you get it. And we'll be implementing it in the morning. That's just how we do, right? We want an educated trader is a profitable trader. All right. And so what we do, so just drop it in the chat. That's what I'm trying to say. So what we do is we come through here and we always check our, weren't we told check the news, check your conditions, check your current events, right? Our entire life. Well, we don't watch traditional news, we watch financial news, right? And as we understand this, we come through here and we see this, okay, right? We come through here and we see this, what you're looking at and what you're seeing is our current events, right? This, no, seeing, no CNN, right? So now what you, I know you're joking, but I'm like, no. So emotions is a cuss word in trading, right? That's a cuss word. And the traditional news is very emotional because they're looking for a reaction out of you. So I want you to know why I say that. So, but what we saw throughout the week is that there was not a lot. Now, once again, I got asked a question this morning, and that's what made me start shifting the training for tonight, because somebody asked me about the news, like, how do they know how to read it? Well, guess what? That's not what we're here for. That's what we have a finance doctor for. That's why Dr. Bythewood is going to have some information for us immediately after this call, right? You don't have to try to read this, right? It's a red folder. And if I open the red folder, right? So what this tells me is this, look at what it says. It says, why do traders care? So it's not telling me that with current, just think about how do they sound when you listen to the news with current inflation, what's going to happen within our economy. That's not what we're here for. All right. That's not what we're here for. What we're here for is to understand that, is this going to make the dollar strong or the dollar weak? What is it going to do? That's what I need to know. Is it going to make GBP strong, or is it going to make GBP weak? That's what I need to know, right? So that's the depth that we need to understand. And then, of course, as you start paying attention to it, right? Non-farm payroll. And what really made me start teaching on this is somebody asked me one day, was like, you trade non-farm payroll? I'm like, why wouldn't I trade non-farm payroll? And the reality is they had always been told to stay away. People do not understand how the fundamental drivers move the market. And so what I want you all to grasp from tonight, we check the news first, okay? Why do traders care? You care, just like what happened this morning with the indices with the US 30. We didn't touch it, right? And then it started pulling back. Had we jumped and tried to get into that trade, or just think about not understanding the technical analysis, as Mr. Rogers just alluded to with Bitcoin, had we not done that, then you would not have been able to dive into that trade. And so right here, what you're looking at, right? Why do traders care? So now we understand fundamentals drive the market, which is why the market was so slow this week, because we did not have a lot of red folders, right? We did not have a lot of information being poured out. We didn't have a lot, but then now there is some inflation talk, right? We had quite a bit of speeches, but some days we're gonna hear the market's just gone. It's just gone. Haha, Bitcoin, right? It's just gone. It's just gone. And then other days we get on here and the market is like, well, wait a minute, right? So we want to be careful. So you guys remember I told you to watch because this was gonna pull back. Didn't I tell y'all that this morning or yesterday? Once it hit our area. So I'm just gonna put that out there. So no, but let's talk because I want to do harmonics. Let me see. Thank you. See, yes, you told us. So, but I want you guys to understand. So with cryptocurrency, what you can see is Bitcoin right now, right? I told you Bitcoin surges, right? Bitcoin surges, gold bounces, Bitcoin surges, and my foreign exchange pairs, right? We're going to analyze, and that's why I like for you all to start there. Now you can trade whatever you like, right? But I just want you to see. And so since this was up, I just kind of wanted you to see what Mr. Rogers was talking about, because the highest it had been before here had been about 65, 66 area, right? That's the highest Bitcoin had gotten. And so when we put our pivot points on here, which we had done this morning, we saw where the areas that we needed to the areas we needed to watch out for. Okay. And so what this does is it really kind of helps you understand. So it might come back up to about, this is the pivot point. It's not coming back past this point for a little bit, right? It's going to go higher, but it's just not going to do it at this current moment, right? As you can kind of see, this is my pivot point area. I'm just trying to give you guys a recap because you guys could trade this through the weekend, okay? Crypto does not close, so you'll be able to trade this through the weekend. But you guys should have took profit on this sell because we talked about this all week. So you should have took profit on the sell. But let's go back over here because I want to focus on where we're trading. Bitcoin is up on everything, right? So now, this is perfect because what I did is come to it's AUDUSD, right? So this is what I'm going to do. Like I said, this is advanced. I know we have some 111s on here, but don't worry. I'm going to take it as slow as I can, and we're going to walk you through it. And then you guys are going to come in the mornings where we implement what we're educating on. And then you're going to make sure you don't miss the foundation on Tuesday night, or you'll watch it this weekend. All right. So now the reason I brought this back, right? That's AUD CAD. What do I have? No, I have AUD CAD. I thought we traded AUDUSD. I did not see that one. All right, that's okay. Let's go back over here. So AUD CAD right here. Come back up here. We have don't these currency pairs look familiar? Right? GBP, NZD CAD, same ones we've been looking at. We're right here on this 4 hour. What you're seeing is a lot of setups, okay? A lot of setups, okay? Quite a bit of setups. That's what you're looking at, right? You saw this is the one, US dollar and the Mexican peso. We saw that one earlier. So this is what I want you guys to get in the habit of doing. And this is where I need you to practice. Because when you first start trading, what you cannot see is the market, right? I get it. I understand. It was me. I was there. I remember looking at this thing. And I remember looking at this. And my son would say, Ma, because we started trading at the same time. And he would say, Ma, do you see that? I'm like, see what? I still think the funniest thing is when he said, just look left, right? Because, in the training, they tell you to look to the left. And he would say, just look to the left. And I said, I'm looking to the left. He was like, so you don't see it? No, see what? Right? And then my daughter is on here at 7 drawing support and resistance lines. But so it's amazing how she can do that without me teaching her how to do it, how he can see this from the beginning. And I was just looking at the chart. So I was you. This is what I'm trying to get you guys to understand. I was you. I was looking at this thing and like, left where? you know, and he keep emphasizing left, and I'm looking at him, it's like, I understand what left is, but what am I looking at? What am I supposed to be seeing? And so that is why, right, I like this combination, because some of you all are going to be natural. Some of you all are going to just look at these charts, and like my 7-year-old, you guys are just going to see, oh, see the touches? I told her one time, touches. I never showed her touches. She can get on here. She's like, yeah, touches, touches. So I just put the line right here, right? So touches, and they see it. Some of you guys are just going to see it. Some of you all are going to need some training to see it, right? I needed training to see it. I did not just see it, okay? And so that's what I want you guys to understand. So if you combine these two, what this does, and I always pull from the higher time frame. If you are training, okay, you're new to this, don't come to this 15-minute chart. That's why you never see me do it. Because the higher time frames give you direction, right? When I'm looking at this chart, you see that we have different time frames. My higher time frame give me direction. My mid time frames is where I analyze. My lower time frames are where we enter. Remember last week, I kind of gave you the analysis. My 4 hours, like the head of the household. This is like the husband, right? This is the dad, the husband, that's the head of the household. This is the mom, right? The mom. So the mom, and if the both of those are in confluence, both of those are in alignment, right? The mom and the dad kind of working together, then the house runs really smooth. If they are against each other, then you have conflict in the house. So if they're not together, do I really want to take a trade right now? Do I really want to do that? So this is why I pull from the higher time frames, right? This is why. And then of course, these are our teenagers, right? Where we analyze. Thank you, great, thank you. So our teenagers, what do? You start giving them authority. You start giving them responsibilities. They can drive, they can go grocery shopping, they can go out and make some decisions on their own, but they can't make the overall big decisions. So guess what? That's my mid time frame, right? So those are my teenagers. So this is why we start on a 15-minute chart. So it kind of gives you a room to get in there, begin analyzing the charts, but we understand that this is not what gives us direction of the charts. See, the parents are still responsible for the direction, but they're starting to build some responsibility. And then down here on my lower time frames, these are the kids. Y'all heard my grandbaby, right? If anybody's ever talked to me on the phone, you heard my granddaughter. She is loud. She is loud. She like the 1-minute chart all over the place, right? So she is loud. And so it's a lot of movement in there. It's a lot, it's never a quiet moment. And that's what the lower time frames do. That's where all the activity happens. So my house is real quiet. It's real peaceful in here, right? She's not here. So, but when she comes, it's everybody talking, everybody loud. She loud. She got everybody worked up, right? So now, don't get me wrong, I love her, but I'm just trying to get you to understand how it impacts, right? So this is why, this is where we want to be. You're talking about you love my analogies. She loud, right? Call me. You'll see she loud. So that's what the 1 minute does. And so it's loud. It's always have something to say. It's always moving, but it has absolutely no authority, right? It has no authority. She's going to do what I tell her to do, right? So this is where we have to understand that my lower time frames have no authority. So this is why you always see me pull from the higher time frame, right? This is why I'm always up here, because they might have a little responsibility, but I'm gonna pull it from up here, okay? Now, why the harmonic scanner? Let me tell you why. The harmonic scanner identifies reversal patterns. So I'm gonna come back up here to the hour. But actually, before we do, let's talk BYOB cash out strategy. Let's talk strategy, okay? Because you have to understand what you're looking for. Because some of you all are gonna be, some of you all are actually going to be on a Tuesday night call, and you'll be on in the morning. But I want you to understand what we're looking for. So the BYOB cash out strategy uses 3 indicators, right? If you are familiar with price action, the market is price in its action, right? So the market is price action. So what this means is that this is the price, this is the date. This is the price, this is the date, i.e. why they call it price action. Now you have some price action traders that trade just straight naked charts, okay? That's about a 70% accuracy rate, all right? And I want you to understand those traders actually are still making money. And so this is why I'm always telling you guys, if you hit stop loss, I'm not concerned about it. Why I'm telling you guys next week you're showing up with your demo accounts while we're logging our trades, right? Because how do I trade at a 70% accuracy rate, which means 30% go the wrong direction, right? It's the wrong direction because it's not where you want it to go, right? So 30% go the wrong direction. 30% do not work out in your favor, but yet they're still on top of the world. They're still understanding the chart. They're still in profit. Well, why is that? Because they're looking at the big picture and not each individual trade. All right. And so that's what we have to train our minds to, because BYOB cash out has a 92% accuracy rate. So, and this is not me saying it because I created it. It's me saying it because we back tested it. It's me saying it because of the reviews. It's me saying it because we back tested it for an entire year on every single currency pair, commodity, and 92% was the lowest accuracy. So this is price action with the twist, all right? Because of what it focuses on. So here we have it. You have your blue line cross over the red and a downward momentum. This is my stochastic. So this is my leading indicator, which means that this happens first, right? My leading indicator, right? So my stochastic is my leading indicator. That means that this is giving me momentum. It's a momentum indicator, right? So your moving averages in here. So understand that it's measuring the momentum on the charts, okay? Now it's different on each one. Yes, it's different on each chart because it's based on the momentum on that chart. And as as you understand that as it flows through, right? You understand that as this moves through, then what you're going to be able to do is understand that this flows, right? From every single thing, right? It flows on every time frame. It flows on each time frame, right? It flows. And so when you start seeing how the time frames correlate together, when you start seeing how the time frames work together, then you'll start seeing how, as the market corrects on one, right? Because here I get a one every 15 minutes and go into the hour. But what we're looking for, because remember, these are our teenagers, this is where we analyze, right? Especially as a beginner, you come here, I'm looking for this blue line to cross over the red around the 80 or around the 20. Now, around the 80, it has to cross over and cross down. Around the 20, it has to cross over and cross up, okay? So this is a momentum indicator, right? Now, all right, now, right here, we have our candles, right? We have our candles. Now, these are not Japanese candles, right? These are not Japanese candles. What they are Hikanashi candles. They're trend candles, all right? Now, being that they're trend candles, and let me add this on here before I mark this chart up. So chart details on, save for mobile and desktop, save for, here we go. There we go. I'm gonna have to put it back up. AUD CAD. There we go. All right. Now, why did I want to do that? Because I wanted to highlight something, right? This is the price, right? This is the price, right? This is the price. So whether like Bitcoin, right? That's the price of Bitcoin. This is the price, what it would take, how many Canadian dollars does it take for me to buy an Australian dollar? If I'm looking at the indices, that's the points. If I'm looking at stocks, that's the price of that stock. So no matter what we're trading, no matter what we're utilizing, this is the price, right? And so you can open this up and you can see the price. Now, there are two prices right here. You see these two? These are two prices. One is a Hikanashi price, one is a real price. So there are many benefits to opening this. You heard Miss Anderson say she opens it because it's bigger. She likes to look at it. I'll open it occasionally, but normally I have it closed. Now, I do that because sometimes this is real close, or you're looking at this and you want to know what the real price is when you're going to enter your trade into your broker account. So that's why that's there. But you'll normally see me with it closed sometimes because I don't like a lot of stuff on the charts. I just don't like a lot of stuff in my face. So when you're looking at this, right, Once again, let's come back down here to my 15-minute. So when we start here, you see that blue line cross over the red and the downward momentum. The blue line cross over the red and the downward momentum. And then what I'm doing is I'm looking for a red candle. So we know we started here. And I'm gonna come, trust me, we're gonna mark it up. We're gonna have time, I promise. So let's start here, right? And then of course, that's that blue line cross over the red and that downward momentum. Okay, now I'm looking for my 2 lagging indicators. My trend candles, which are my Hikanashi candles, and then my PSAR, which is a trailing stop and reversal. Now, we need a flat top candle. We did not have that there. We had red, but we needed a flat top candle, okay? When we got the flat top candle, I did not have a PSAR. I need all 3, not one, and then one might be coming. I need all 3, okay? So when I get all 3, this is where we are, okay? This is where we are when we got all 3 of the indicators. Now, what I have to do is I want to do my time frame confluence. Now, why is that important? Because you want to make sure the market is in alignment. Then your car rides smoother when it's in alignment. So you want to make sure if that my teenager is in alignment with the parent. Haha, right? My teenager is in alignment with the parent, because as we all know, who has children on this call? How many of y'all have children? We all know that our children are not always in alignment. But what are we going to do? We're going to get them back on track, right? We're going to put them back in alignment. They're going to get back in alignment. So that's how I need you to think about the 15 to the hour. So here it is. This is my teenager. And you want to make sure that he is in alignment with his parents. You're talking about some, yes, kids. See, I bet you guys remember when you trade now, right? I know when you sit down trading, you're going to say, wait, did he ask his mom and dad? Did his mom and dad say it's okay? So when we come up here to the hour, what does this look like? So my candle might be red, but what is my stochastic doing? Now, remember, we can't see that it kept selling for whatever reason. This is what we see, right? So now trust me, this was not based on what we know of the momentum and the stochastics and everything in the market. Do you think this would not have been pulling down right there? That's because it started pulling a little bit. Now, as I look right here, and as you can see this, right? When I look right there, what is my stochastic doing? Somebody help me out. What's my stochastic doing? What's my stochastic doing? What's my stochastic doing? Right. My stochastic is buying, right? My stochastic is buying, right? My stochastic is in a buy. So I'm not too eager to take that. So it's not in alignment with the parent, right? So it's not in alignment with the parent. And so we would have, like, did it ultimately end up, it did, but that's not always the case. Remember, I don't want 92%. I want higher than 92%. I want to make sure that you can walk out with that trade. So that's not always the case. So what happened here and how it continued to sell, we already knew the market. We've been talking about it. But now it's like flipping a coin. What I will tell you, this is not gambling. No, ma'am, no, sir. We don't gamble, right? We operate in discipline, right? Not our feelings. So a disciplined, right? Discipline. And so we wouldn't have took that trade. So I don't need you feeling any kind of way because that trade played out, right? Exactly. No, ma'am, no, sir. I just said that way too many times. No, ma'am, no, sir. You are not taking that trade, right? No, ma'am, no, sir. Now, let's just say it wasn't a sale. What would we do? We would have dropped down, right? We would have dropped down to make sure our 5-minute is still selling. So now everything is in alignment. It's what we call time frame confluence, okay? That's what that is. So now, why do I like this? Let's come over here to our chart, right? Because we have it on a 4-hour. So let me kind of get this for you. So what I'm gonna do, right, is AUD CAD on the hour, right? We trigger for a sale. So this is what I'm going to do. We're gonna mark it up. So what we do first, right? It's not marked up already because I want you guys to be able to mark it up. I want you guys to be able to understand what we're doing. So you notice that on my harmonic scanner, right? When I come back up here to, something just moved. When I come back up here to my higher time frame, what you notice is that this you see that it has take profits on there, right? You see these 3 take profits? Understand these are not quote unquote take profits. I wish they would name them something else. But because you guys blindly think that it's a take profit, it's where the market is definitely going to go. And your question is always, how do I get to take profit 3 instead of understanding how the market? So what this does is that identifies harmonic patterns in a market. Harmonic patterns are reversal patterns. You see how each one of these have, now this is in, if you want to understand harmonics, the academy is going to teach you in the series 3 or 400, right? And RC, you know, it's long videos. It walks you through understanding the harmonics. I watched them, I rewatched them, but I'm not doing it, okay? I'm not coming in here and doing all these calculations and the Fibonacci retracements when we have a tool that does it for us. Why would I do that? So if you want to know, it's right there for you. For me, I'm gonna let the tools do the heavy lifting for me. So what it does is, this is based on a Fibonacci retracement. So Fibonacci's are based on percentages, right? So that's irrelevant. What we're doing is we're writing down those numbers, taking a screenshot, doing something, because we don't do it over there. We bring it back to the vibrato. Now, when I do this, right, AUDUSD, so it's 922. A7 is the first one they identified as a take profit. So I'm gonna put that on there, okay? Then we come over here, we drop the other one. So does this help? Because this is what you guys see me doing in the morning, right? Where you see me getting this, and this is where I pull from the harmonic scanner. When I said, hey, okay, we were on a harmonic scanner, and then we come in here and we begin marking up the charts, okay? We come in here and we do this. Now, what it's going to do is it's gonna help you begin to see the market. So just based on that right there, is anything any clearer to anybody, right? And you do have to squinch the charts up, okay? We do have to squinch up the charts, okay? You say, oh, that's good. Light bulb moment. I love those moments, light bulb. So we do have to squinch up the chart so you can see it. So now what you're seeing is, look at how, I'm gonna squinch them up a little tighter, right? I got an oh yes and an oh that's good. So right here, when you're seeing now, look at how, right, where that Fibonacci retracement level is, you can see exactly, you see the support and resistance. So you can see those lines, right? You can see it. And then what do we say? What do we know? That this tends to happen around psychological levels. Now, what is a psychological level? A psychological level is a level within the market, okay, where the more zeros we have, the stronger it is. So just think about who you are as a person. We have an entire training on this, okay? We have an entire training on this where we talk about the psychological levels, but the reality is psychological levels. So what we talk, wait, I'm gonna answer that just a second. What we talk about is the psychological levels, right? Or because people round, right? Nobody except for my sister, that's the only person I know, and obviously one person who made $499 instead of 500 rounds, right? So we had one person that dropped that in the chat, and then my sister always is like, no, that was $1.81. Or like if you send her to the store, she's gonna say, you send her to the store or whatever, she give you some money, and you know, she's like, well, how much did that cost? She's, oh, it was $7.87. Or it was whatever, you owe me $2.36. And I'm looking at her like, are you serious right now? I just give you $2. And she'd be like, what my 36 cents? No, and it's not that she got money problems. She's just always been like that. Like, that's how her mind works, okay? And I don't understand that, right? I cannot comprehend that. And the reality is most people cannot comprehend that. Most people round, okay? Most people round. So what you're seeing is around these rounding, so that's why they're called psychological levels, because this is where the market tends to get reversal patterns. This is where orders take place. This is where your spreads are going to be greater, because if you place an order with the financial advisor, the guy that's on the stock market floor on Wall Street, you place an order with any one of those, they're gonna round it. And so banks are going to round it. Now, financial investors and institutional investors, if they're rounding, they're the ones that move the market. So what do you think is going to happen? We're going to have impact around these levels. So this is what those blue lines are. So I'm going to squinch up the charts a little bit tighter. Let me go up a little bit more. And so what are you seeing around these levels? Okay, remember, there's stop signs in the market. My stop sign does not give me direction, right? But it makes me stop and recognize and identify what's going on. So just like when you leave your neighborhood, it's a stop sign. It gives you no direction. You still have to decide if you're going left or right. But what this does, okay, or straight. But what this does, right, is you can see how the market is reacting around these levels. Even if I come put one up here, right? If I put one up here, 95, all these zeros, you can see how the market reacts. So this is where the market consolidates. This is where the market, you see, look at all that happens around. I mean, it's another one right here, the 94. Look at how the market reacts around those levels. Look at how it's rejecting right there. So this is what the market's doing, okay, guys? This is what the market's doing. So if we can see that the market's rejecting, we can see, right? Take a look right here. Look at all this activity that's happening right here, right? How the market's reacting inside of this. This is why now, okay, you see that we have those reversal patterns in there. And then of course you have your midpoints, which is kind of where this is turning around. So even if I put my midpoint on there, which is a 92.5, is that what you're trying to say? Because you got 0.50. I don't know what that means. Don't know, need some clarity, right? So now you can see that this is a reversal pattern. That's what this is calling, right? So now we started with a very clean chart, very clean chart. My blue lines, so anytime you get on a call with me, the blue line is going to be the psychological level, right? That's what the blue line is going to be. It's the psych level. So everything else we just identify as support and resistance. All of them, hot mic, and it's a loud mic. All right. So what you're seeing, right, is, so we have our blue lines, right? We got our blue lines, My yellow lines are support and resistance. So now this has been identified, like, so the market is looking at this being a take profit 1, which is already hit, a take profit 2, and it's saying it's possible it come down to there. Would you say the harmonic take profits are actual? Yes, they are actual support and resistance lines, right? So you've seen us put pivots on the charts. Pivots are support and resistance. Psychological levels are support and resistance. The Fibonacci retracement levels are support and resistance. All of them are support and resistance lines, okay? But you just have to come in and make the adjustments if need be, right? That's what you do. You come in and make the necessary adjustments. So now if I'm on my higher time frame, okay, and we begin to see that playing out. So what we know is right up in this area, we began to have some sell activity, right? We began to have some sell activity. So it already scanned the market and it identified it. So it began to have some sell activity. So now this is where this helps you no matter what your trading style is. Can you guys, let me ask this question before I go further. Can you see the market at all? Can you see the market better than when it was a naked? Can you see it? Even if it's your first time on here, can you see it a little bit better? So I got some yeses, I got some yeses, I got some yeses, I got a C. I told you I don't speak Spanish, but we're gonna work on that. We are going to work on that. So, and you say, yes, you like it. Awesome. Now you should understand, give me a 555 so I can tell the difference if you understand why I like this tool for someone beginning a trade, or even just someone who is starting to, or even for the consistency of your trades, starting the trade or the consistency of your trades, building your skill set, building your understanding, building your knowledge base, right? This is why I like this. So now, no matter what your trading style is, because we're all different. Some of you all might want the trade to just sit and let it ride, okay? Yay, light bulb. What's that, our third or fourth light bulb for the night? All right. So what is this? So for me, it's if you're gonna let it sit and let it ride, right? What are we gonna do, right? We're gonna sit and we're gonna let it ride. So what are we gonna do, right? And then, okay, or let's say I'm a scalper, or let's just say I want my 10 pips and cash out, because we saw the compounded sheet And we know we can do 6 figures in 6 months, okay? But we have to do it as an educated trader. You know, we have to. So if I know that, and I know that I can do 6 figures in 6 months doing 10 pips, or remember even last week, we broke it down a little bit deeper into the ones of you all who want 10 pips and those who like to let it sit and trade, let it ride. Okay, so, but you see it every Tuesday, you see that compounding sheet, 6 figures in 6 months, because it's real, guys, it's real. So it's real. I can't tell you how many people be like, I'm compounding. So, and I get excited every time. So send me the messages. Those I do want. The spammers, I don't want them, right? Y'all just block them and everything else. I want the ones that you telling me you compounded. I want the ones that you telling me you made some money. I want y'all to participate in Club 777, right? So it's Club 777. So now when we look here, okay, right here, my 15-minute chart, okay? So now you see me down here on my 15-minute chart. So look what happened prior to that, right? Look what happened prior to that. So I have my blue line cross over the red in a downward momentum, okay? Downward momentum. Then I have my red candle with a flat top and my PSAR. So look at all of this that transpired right here. But you notice that I did not get confluence until we have this candle. So now you understand that I can use that, and I can use my hour here as if I can do my confluence before I go down to the 15. So let me delete this one. I'm gonna show you what I mean. So here I am on my harmonic scanner, right? I'm on my harmonic scanner. I come here to my hour, okay? So I'm here and I can see where this is pulling down, right? I can see where this is beginning to sell. So now I drop down to my 15 and now I'm looking for where we have confluence. I get confluence right here, right? Remember how I told you it's 3 phases, it's 3 steps, it's three. However, you know, you just need to do them all. It doesn't really matter the value, right? You just want to make sure you get them all done. It doesn't matter the value, the order, right? So now I did my time frame confluence first, and now I see my blue line cross over the red in a downward momentum. I have a red candle with a flat top and a PSAR flip, right? I have all of that, okay? I have all of that. I check my 5-minute, I'm still selling. So now what did I do? Get my 10 pips and cash out or trade to my first support and resistance line. So what we were able to do, that was a good 23 pips right there. That was a solid 23 pips. So you definitely got your pips. You made your money. We walked out in profit because we understand what we're doing with these charts. So, right, we are BYOB educated traders anointed for wealth. Why did you select the psych lines? Why? Oh, I didn't. It wasn't I was looking for a psych line. I just put them on there. Now, I just see it went 92, 92.5, which is the midpoint, 93. So I just put the ones on the charts around the one where we are. So it wasn't anything special about them. You know, that just happened to be the stop sign in my neighborhood. So remember they're like stop signs. So I'm not gonna come put a stop sign way up here. These they're just not psych levels. So I mean, and then I told you 94, I just didn't drop the line, but we talked about it. So, right? We talked about it. So now what we're doing is, in order for me to take the trade longer though, in order for me to ride it out, I need to have confluence on all of it, okay? I need to have confluence on all of it. Now, this is why I want to talk about the different types of market, right? Because you need to be mindful of where your take profits are. And this is why I said we were going to talk about that, but I think we needed to do this first, right? I think we needed to do this first. So when we look at it, okay, when we look at it, I'm looking at, I need to allow this to ride out. So we got to take profit 1. And when we got to take profit 1, you notice that my stochastic had gotten down to the bottom. This is going to help you determine if you keep going or if you wait, right? Because my stochastic had gotten to the bottom on my 1 hour. So now here I am at this line, right? We're talking to different levels of traders, depending on how you like to trade. If you're a 10 pip and scalper, you are already out of the market. But for my swing traders, my intraday traders, do I stay in the market? When I look at my stochastic has reached the bottom, then no, I do not keep going, okay? the market has to correct. How much of a correction? We don't know. All right. So you wait and you let it correct, and then you come back and you re-enter the trade. Okay. So any questions, comments, testimonies? Because I was hoping we got quite a bit of AUDs, but we didn't get an AUD cap trigger. Now I'm gonna tell you this. This triggers corrections. The harmonic scanner triggers reversal patterns. So if I have a reversal pattern and it's the corrections, what will happen is, okay, hold on. All right. What will happen is you'll be moving in this direction, okay? So let me mark this up real quick, because I want to show you, this is going to impact everybody. And we'll do it again. If you guys need some more clarity, we'll do it again. That's easy. So you can see, do I mark up on the hour? Yes. When we first pulled this up, we brought this back to the vibrato and we did it off the hour. Yes, we did. So you can see this pulls down, right? This is what we call the Elliott wave, right? Right? We've been talking about these. I'm so happy. Light bulbs, all sorts of light bulbs tonight. I knew we needed to do this. I'm so happy we did. So now let me change the color so we can have a different color. So now it's still real similar, right? So as I look at this, okay, right, as we're looking at this, what you're seeing, right, is that wave pattern. Now, when this moves down, so we know that this is how the market is going to move till we get to this harmonic, to this last take profit if it goes all the way down there, right? That's what we do know. That's what we do know, right? Yes, no, maybe so. So the market is never going to do this. The market will never do this. I want to be very clear. This is not happening. That would be a beautiful place to be. It would be a perfect world, but that's not a reality. That's not how it does. This is how the market moves, right? This is how the market moves, like this, okay? So you can see where it pulls down, it's going to pull back up, it pulls down, pulls back up. So now we have a harmonic pattern that tells us that the market is moving down. Then if we come here and we get a correction, what the vibrato is going to do is the vibrato is going to call a trigger right here on the 5 minute, right? Because it's going to listen to the toddlers because they're loud, they make a lot of noise. So they're going to don't they get your attention and let you know something's going on? Even if they're quiet, this letting you something's going on, right? Because now you need to go get up and actually go check on them because they're too quiet. But the point I'm making is if it's something that triggers your grandkids or your little kids, the toddlers, they give you triggers all day, right? They're going to create the most noise. They're going to trigger all day. And what that means is take a look. Take a look. Something's going on. Most of our triggers come on the 5 minute. The toddlers make the most noise. The toddlers give us the most attention. So when these trigger, they're saying, hey, something's happening. And so what's happening is it's in a correction. And so if I was to drop down on this right here, where we just drew that Elliott wave, this is where I would get a trigger on my 5 minute. Then you see it's called a correction. So then we take the trade. So what's the question I get? 99% of the time is the trigger, the entry price. I'm going to say it. Absolutely not. Okay. The trigger is not the entry price. The trigger is the trigger, like we're going to pretend like this say AUD CAD. The trigger is the trigger that says, hey, I'm going into a correction. Now this goes into a correction. So yes, if this is triggering for a sale, then that means that when you look at this, the market should be buying because it triggered a correction, right? Don't we have to correct those toddlers? It's triggering a correction, okay? They trigger a correction. The toddlers trigger a correction. The market is triggering a correction. Now it should make sense to you because if they're making a lot of noise, it's something you need to go check on. It's something so you can correct it. the market's correcting, all right? And it's gonna go back the way it's supposed to go. So that just like they're gonna get back in alignment, so is the market, all right? So this is what it does. Then we're gonna get another trigger right here. So I need to check on the Tyler again. They get their pow, right? They get back in alignment and then they come back. Yes, I said they're getting a pow, right? Because we're not going to talk to them. We don't need to talk about it. Get back in alignment because you know better. So keep selling. Then come on, correct, and keep selling. So this is where the vibrato triggers, all right? This is where the vibrato triggers. So when you see triggers, just think, I need you to get back in alignment. I'm gonna correct, it's going to correct. You gotta correct their behavior. You're gonna correct, the market's correcting. So call them. You know what, call them. That's what my mom used to tell me. If you call on people, they can keep you. So I'm just saying, that's exactly what she used to tell me. She was like, you think they're gonna feed you and do this and do that? You think that's what's gonna happen? And she was like, and I'm not coming to get you. She said, I'm not paying money to come get you. If you want to go, then have fun. Just make sure if you pick up that phone, that's the decision you want to make. Call them. So that's how I feel. And I thought, thank you, got my bell, but I appreciate it. So, but I guarantee after this conversation we had tonight, you all remember this. I bet you remember, I guarantee you remember it. So, all right, any questions, comments, or testimonies? It's almost time to transition. Any questions, comments, or testimonies? Praise God, I can see the light. I love it. I'm so excited for you. We had some light bulb moments on here tonight. I love it. Now you see where we going? Club 777, 777 in the chat. 777 in the chat, right? 777 in the chat. Who's ready to be a part of Club 777, right? Who is ready to be a part of Club 777? You is Club, there we go, 777 in the chat, Club 777 in the chat. All right, now what does that mean? That means that the market is your personal ATM. If you need something, go make a withdrawal because an educated trader is you know what, you stop me. An educated trader is a profitable trader. No, this is the vibrato. This is the vibrato, right? So clubs, I'm dressed and ready for Club 777. So I'm excited. So guys, what do we need to have next week? You need your demo account, right? Because the only way you're going to do it is stop watching. We're in the market. You need your trading journal. You have to record those trades. We need to make sure we're analyzing it, right? And come ready for Club 777 because guess what? We turn up just a little bit in the chat. So this is definitely the largest economic empowerment movement. I love it. But I know I'm visionary, huh?
Yeah. Let me dive in here real quick before you transition. And once again, I want to applaud, the efforts of our educators. So this has been an amazing week. But if you've got some value out of the information that Ms. Dyer shared with you this evening, I need you to drop a 777 in the chat. Because I want to help you really understand something. And when we look at the tool that you've just had the opportunity to be able to be exposed to, this is for those of you who are currently enrolled and for those of you who are guests. I want to give you a perspective. I've had the privilege of being able to take a tool like this, and I had the opportunity to participate in one of the largest mergers of investment firms in the history of investment firms here in the United States. And I'm going to give you three names. And, one of the names of this particular entity that I had the opportunity to take a tool like this and share it around the globe, around the country to financial advisors. And it's one of these three companies, Merrill Lynch, Goldman Sachs, and Morgan Stanley. And the revenue, the amount of cost that one of those entities that I had the privilege of being behind the veil with, they spent well over to ensure that individuals, their financial advisor had tools like this. It was well over $1 billion to have the same efficacy and the same type of tools that you now have access to. Well over $1 billion. well over $1 billion. And when we came up with this whole movement, the concept of Be Your Own Bank, this is one of the reasons why we are adamant about helping you understand really what you have your hands on from a value understanding perspective. So imagine this. You get an opportunity to participate in the largest market in the entire globe and have the same quality and level of intel as what the big banks of the world utilize. So I don't want you to miss this tonight. And I want to reinvigorate some of you that may sometimes think that this is a game. No, this is what happens every single day when the major investment firms, they have access, and you have this tool in your hand, this level of information, not only this tool, but the entire suite of tools that you now have access to. And then I want to add some perspective to this as well. Think about it. In the United States alone, the average four-year graduate, after they leave their collegiate experience, they leave college with the national average in the United States is $30,000 in debt. I want you to take note that I want you to understand this. And then not only do they leave with $30,000 worth of debt on the average monthly payment for student loan debt is $393. $393. And then the average starting salary in the United States is $55,000. So you leave with $30,000 in debt. The average starting salary is 55, and depending upon where you are, and that includes all majors, and we know some majors are more than others, but think about it. You're in debt $30,000 from the beginning, and to hope that someone finds value in you and offers you a position at $55,000. And then if you do the next thing that most of us was encouraged to do, because we're talking about education, but we're submitting to you tonight is really what you're being educated upon. Because if we're all honest with ourselves, many of us who had the opportunity to matriculate through that level of college, postgraduate, specialty degrees, it was not necessarily because we wanted to be educated, but it was the formula that we were all taught. This is why this movement, this economic empowerment movement, is of necessity. And then if you have the opportunity to venture into your graduate studies, MBA, for example, the average starting salary is $87,000. But the cost to obtain that degree with your MBA on the average is $55,000. The average college experience on the average in the United States is $25,000. So what am I saying? You get an opportunity to sit at the feet of our amazing educators. You enroll in the academy, right? And remember, no one can realize those projected revenues on the average for 4 to 5 years. But you can come tonight, make a decision to enroll in the academy, and within your first 30 to 45 days, find yourself in a position where you're compounding in versus out, and then put yourself and your family on the other side of money because you made a commitment to absorb this information, to be led by some amazing individuals, and you get an opportunity to have an unlimited cap on your resources. Now, if anything that I've said tonight, if it resonates with you at all, if you're excited about the fact that you now literally can take your pen and create your own personal financial narrative because you're making a commitment to yourself to stay engaged, to stay plugged in. If you're excited about that, I need you to drop an 888 in the chat. If anything that I've said inspires you, it makes you want to stay committed to this process, and then make sure that you don't leave anyone left behind. Ladies and gentlemen, this is the only opportunity that you can have, that you can now say to yourself, I'm going to tap into an industry that allows me to receive as much revenue as I desire. And we're giving you the PIN code. We're giving you everything that you need, the value behind these tools that you now have access to. Listen, I want you to make a commitment to yourself moving forward that you're going to stay plugged in. You're going to make your personal finances a priority, And then you're not going to leave anyone behind because they at least need to be exposed to the information, your friend, your neighbor, and your relative. And you now are the solution to everyone's challenge that they may be experiencing. And all you have to do is be willing, bold enough to open your mouth, invite them into this environment, and they get an opportunity to absorb this information. And it's not predicated upon what you have not done or done, but simply exposing them to this quality information, the value of the heartbeats of the people that you're now connected to. And all we want to do is see you become better than what we have already been able to accomplish. 2 million families financially educated and impacted. Ladies and gentlemen, it is real. It will happen. And you're going to allow us, and we're going to work together to ensure that the next 90 days, you're going to benefit so many people because of the decision that you're making tonight. I just wanted to share that with you to give you a perspective on the power behind these tools, the value behind these educators, and how you can no longer take this information for granted. We're going to teach you how to operate in excellence and execute in excellence. So, Ms. Dye, I just wanted to share that with you. Back to you.
Big bank frequency is what I saw in the chat. So I'm going to repeat it after all those comments and that excitement. So I'm definitely excited. I know we went over a little bit over this evening, but guys, it was for your benefit. Tonight was for you. It was to prep your mindset, to prep you, right? Because we have families, right? We have families that we need to free, right? We have people that we need to free. We have lives to change, okay? That is what we have to do. And so with that being said, let me stop